right, should we get started? 3:30.
Okay, well, welcome everybody. My name is Mike Bennett. I'm the Fruita City Manager, and we're excited that you are able to join us. And I wanted to introduce who we have on this webinar today. We are fortunate to have Paul Wisor, who is the City Attorney. Paul Wisor is an attorney with Garfield and Hecht, and we are super fortunate as a city to have Paul as our City Attorney. He not only represents the City of Fruita, but other municipalities and financial institutions in the state, and has been doing a lot of study related to the legislation that has been geared towards the COVID-19 response. So we will hear from him very shortly. Also joining me is Shannon Bosson, who is the city's management analyst and also our PIO during this time. And so we're a couple things as you participate. Paul's going to give an overview and a presentation. You'll be able to see his slides and walk through a few pieces of legislation, and then we'll take questions at the end. The way to ask questions during the presentation, we may stop during, or we may go to those just after, but you can submit questions through the chat if you're directly connected on Zoom, or if you are live streaming through Facebook, feel free to make comments there, and we'll try and keep our eyes on those. Or if you are just listening on the phone, you can email communications@fruita.org. So let's jump right into it. And thanks again, Paul, for being here to go over this with us. Paul Wisor.
Thanks, Mike. I appreciate it. Thank you, everybody, for joining us today. As Mike mentioned, I represent municipalities and private employers throughout the state, as well as financial institutions who have a significant interest in the outcome of, and I'm going to stop sharing for a moment because I didn't get my screen where I needed to be. I represent a bunch of financial institutions who have a interest in how the legislation not only affects their operations, but their employees as well. And so I spent a lot of time on the pieces of legislation that we're going to be talking about today, and how they not only affect those individuals, entities, but how they affect the community as a whole. And so I think that what we really need to be focused on is not only what this means for each other as individuals, but what it means for us as a community. And Shannon, are you able to see me shifting screens? Great. All right, so to begin with, there's been a stimulus package that has come down over the last several weeks, and it's come down in several phases. We're just now getting the results of the phase 3 legislation, which was the CARES Act, but there are two pieces of legislation that came before that. One was a small piece of legislation that was meant to provide for funding for medical facilities and various agencies throughout the federal government that would be responding to the crisis. Second was what is known as the Families First Coronavirus Response Act, and that had a bunch of employment provisions in it and was meant to help us figure out how our workplaces were going to operate during this crisis. Finally, the CARES Act came down, and that had the $2 trillion worth of spending that we've all heard about in the last few days. That was signed into law on Friday by the president, and is now quickly coming into effect. In fact, we'll talk about some things that are going to be taking place tomorrow that are going to be of interest to business owners. That act also had a bunch of provisions in it that related to employees in terms of unemployment and direct payments to individuals. So we'll be talking about that, as well as some other pre-existing efforts that have taken place in the past that I think are relevant again, unfortunately. So first, we're going to talk about the Family First Coronavirus Response Act, and that was basically put in place to assure that the workplaces around the country would be able to continue functioning without necessarily leading to further spread of the virus throughout the country. It has two main provisions. First, it has a paid sick leave provision, and then secondly, it has a emergency family leave provision, both of which are going to be fairly unique to the employers that it impacts. FCRA itself is effective as of yesterday, and so there are a bunch of steps that some employers probably took as the virus was taking hold that are not going to be subject to FCRA, but that as of yesterday we need to start abiding by. I would say that additional rulemaking authority is going to be forthcoming, but that is somewhat of a misnomer in that rulemaking came down late last night. And so the Department of Labor issued frequently asked questions on March 27th, which are somewhat helpful if you have some real specific questions. They actually address those fairly well. But then late last night, the Division of Wage and Hour actually issued temporary rules, which actually dramatically affect the legislation. I often think about legislation coming down and that's the end of it, but it's important to keep in mind that the CARES Act and FCRA both provided broad rulemaking authority to the Department of Labor and the Department of Treasury to make additional rules that can change the legislation. And so there are changes that have been brought down that change what is actually in the legislation in some pretty significant ways. And we'll get to some of those. With respect to FCRA, it covers employers who have fewer than 500 employees, as well as state and local governments. And it also includes employees who are both full-time and part-time. And so we have to think about what this is going to mean for the entire workforce in a variety of different ways. Now, I suspect there are people out there who are employers who have fewer than 500 employees and are thinking, gosh, I don't want to have to be subject to a bunch of these provisions. And the good news is that it is possible that you will not be, but that is certainly not guaranteed. There is a small business exception that would apply to employers, but those exceptions are very narrow. You do not have to apply FCRA to your employees if the leave that is provided under FCRA would leave you as the employer unable to operate at a minimum capacity. The absence of the employee would be a substantial risk to the financial operations, the health of the business, or that employee otherwise has a significant amount of knowledge that is a key component of the business. And finally, there can't be, or another exception would be that there aren't enough workers within your small business to operate at a minimal capacity. So it's not just like you're having a hard time operating, it's that you can barely get anything done and keep the doors open without that employee there. And so it's important for those people with smaller operations to know that the payment obligations that we're talking about may not apply to them, but they're going to have to, those employers are going to have to very specifically articulate why it is that they can't meet those obligations. Just a quick note that emergency responders are not included within FCRA, and so folks who obviously are police and firefighters are not eligible for FCRA benefits, but more importantly, in our medical community, basically anyone who is in the medical field is going to be deemed an emergency responder for purposes of FCRA and thus not eligible for its benefits. And the term is pretty broad. So if in fact you are a person who's employed to transport people to a medical facility, that definition would apply to you. So let's talk about the first benefit that FCRA provides, and that's emergency paid sick leave. It was basically put in place in order to provide that we wouldn't have sick people within the office. We don't want infected individuals to be coming to work and getting other people sick. As we all know, the governor of Colorado has indicated that if you are ill, it's likely that you will infect at least an additional 4 people if you're out and continuing to roam around within a community. There are 6 reasons why you might be entitled to paid sick leave under FCRA. And let's keep in mind that this particular paid sick leave is separate and apart from the regular sick leave that your employer provides you, or you as the employer provide your employees. So this is a separate benefit. And as you can see on the screen, there are 3 main reasons in terms of caring for yourself why you're allowed to take leave, and that's you're subject to a local quarantine or a federal quarantine or a state quarantine. You've been advised by a healthcare provider that you need to quarantine yourself, or you actually have symptoms related to COVID-19. And if you're exhibiting those symptoms, you do not need to be coming to work. In addition, FCRA provides 3 additional reasons why you may be entitled to sick leave, and that's in terms of caring for somebody who is infected. And so caring for somebody who has been subject to a quarantine, caring for somebody who's experiencing a condition that is identified by the Secretary of Health and Human Services, which, to be honest, no one really knows what that means yet. And I think everybody's working feverishly to figure that out. And then I think most important and pertinent for a lot of people, or at least a subsection of the community, if you're an employee who's caring for a child who typically attends a school that is now closed due to COVID-19, you are allowed and entitled to take emergency paid sick leave due to you having to be at home to care for those children who are no longer at school. Now, there's an open question as to what happens come May or June when school gets out and parents are still responsible for caring those kids. A lot of parents rely on, say, the Fruita Rec Center to provide programming during the day in order for them to go to work and for their kids to be cared for. What happens when, if the community center isn't able to open back up in time for when school would normally be out? It's unclear whether or not this paid sick leave would be available to folks in that situation, because the language only talks about school closures. It doesn't talk about kind of other broader opportunities for taking care of kids. Let's be real clear about when this sick leave can be taken. There are these 6 reasons why you can take it, but it's not just that this reason exists. It means that you can't work or telework. So just because I am sick, let's say I contract COVID-19, but I'm one of those folks who feels just fine and fortunate enough to feel just fine, I'm still able to telework from home, and as such, I'm not entitled to emergency paid sick leave under this particular legislation. It's become clear in recent days from both the FAQs that the Department of Labor issued, as well as the rulemaking from the Division of Wage and Hours, that an employer both may require information from an employee as to why they're staying at home, and then require information. And so an employer may inquire as to, look, what's your name? What exactly is your symptom? Are your symptoms? And what is the reason? What are those 6 reasons are you taking that particular leave? And then after they get that information from an employee before they take their sick leave, they also then may require additional information, such as a doctor's note to say, yes, this person is in fact ill, and I have in fact suggested that they stay home, or here is the order that has been issued for this person to stay home, or broadly speaking, here's the order that applies to our entire state. And that documentation is, one, important to identify that the employee is validly taking this leave. But then secondly, as we'll discuss in a little bit, there are tax credits that the employer is allowed to take in order to pay for some of this leave, but in order to actually get those credits, the employer is going to have to document that the leave was appropriately taken. So it is important for the employer, from the employer's perspective, that they get that documentation. So the emergency paid leave is for 80 hours for a full-time employee. For part-time employees, the calculation is a little different, but it's basically the average number of hours you worked over a 2-week period. And then if you have variable employees who will work 3 hours here, 7 hours there, you can basically get to that calculation by taking their average pay or average hours over the duration of their employment with the employer. So the critical question, I think, for everybody, both employees, how much am I going to get paid, and employers, how much do I have to pay for this paid leave? For a full-time employee, if you're going to be taking reasons 1 through 3 that we identified above, that is reasons why you're taking care of yourself, you're entitled to up to $511 a day, but you're mostly entitled to your regular rate of pay. So you get your regular pay up to $511 for those 80 80 hours. If you're going to be caring for somebody else, reasons 4 through 6 that we discussed, then that number gets reduced to 2/3 of your regular pay, but caps out at $200 per day and a total of $2,000 for the entire 80-hour period. There is some question as to what regular rate of pay is, but it's essentially the average of what the regular pay has been for the last 6 months. I think that there's going to be more guidance from the Department of Labor on that point, but just that for employers and employees, that's the easy rule of thumb to figure out. There has been some questions as to whether or not you can say, especially if you're taking care of somebody else, so reasons 4 through 6, if you have a spouse or somebody else who can help out, whether or not you can end up in a system where you take Monday through Wednesday and then your spouse takes Thursday through Friday. And the guidance thus far has been that you can do that so long as your employer or the employer agrees to do that. They're not required to, but you may do it and still receive the benefit. The one exception to that being that if you are quarantined on the recommendation of a healthcare provider, you have to stay home for the entire day. And I think that makes logical sense. If you are in fact infected, the public policy underlying this entire legislation is we want to keep people away from each other. And so we don't want you coming in to the office at all, even intermittently. So in summary, if someone is infected by COVID or their family is infected by COVID or otherwise they need to care for somebody due to the disease, they are entitled to 80 hours of paid leave from the employer. But as we'll discuss, the employer is able to make that up through some sort of tax credit. Relatedly, there is a concept that I think everyone is familiar with, known as the Family Medical Leave Act. It's a law that requires employers to provide employees with job protected time off for medical leave due to personal or family reasons. Traditionally, most employers provide this leave as a unpaid leave, but FCRA adds an additional requirement for employers who are under 500 employees. And this particular leave is paid leave, which is a dramatic change for most employers. Any full-time, part-time, or temporary employee is entitled to this leave as long as they've been with the company for 30 days. And there is, unlike some leave, there's no minimum hours in which you have to have worked. Again, it's the concept of whether or not you can work or telework. So again, if I can be at home but continue to do my job on my computer, I'm not entitled to this leave. I should also note that the only reason, though, the only exception that applies here is if you are at home because your kids are home, because their school is closed. Now you'll remember those reasons 1 through 6 that we just talked about for paid leave. Only exception number 5 applies in this case. And so if my kids are home because school is closed, then I can take this medical leave. The first 10 days of my leave are generally unpaid, but that can be backfilled by other PTO or other emergency paid leave. And then I get 12 weeks of FMLA time off to be with my kids while they're at home. I was very specific in saying be with my kids instead of having to be with my kids. I would note that the paid leave is capped at $200 per day and not more than $10,000. So it's not as generous a benefit as the Emergency Paid Leave Act, but it is up to 2/3 of your regular rate of pay as an employee. Again, you're going to need some sort of supporting documentation that the school is closed, and the employer is going to want that for tax credit purposes. For an employer's perspective, and frankly from employees, the important thing to remember with FMLA is that your job is still going to be there when you come back. Now, obviously, we're in some interesting times, and so if the employer experiences a financial downturn due to COVID-19 or frankly any other reason, and the employer, the business as a whole, no longer exists or has to eliminate positions, they don't have to provide you with a position when you come back if there is not such a position to be had. there are certain conditions under which an employee who has under 25 employees does not have to have somebody back, and those conditions are very similar to the small business exception that we talked about before. And basically, it's if your business is going to be critically affected by that employee's absence, you should be able to fill that position and essentially go on your way, and you don't have to have that person come back. Now, of interest to employers who are probably doing a little math at this point and thinking, gosh, if I have to pay 2 additional weeks of pay for one employee, let alone perhaps many employees, especially if they get to stay home with their kids, this is going to add up pretty quickly. The Congress and the president determined that they're going to pay for this through a tax credit program, and essentially provide you with a refundable tax credit against the Social Security payments and taxes that you make every year. And so you'll get paid that. And then if there's an excess in terms of your credit that you receive against your liability in any given year, you'll then receive cash at the end of the year. At least that's the way it's currently working under the legislation. I don't know what it's actually going to look like when the guidance comes out. I suspect that it might be subject to change as people think through what that means for the federal budget. But we'll see as a current plan. So that's essentially how employment is being dealt with at the moment. It's this idea that we want to keep Fruita happy, as well as healthy and safe, as well as the entire country. And we want employees to stay home if they're ill, and we don't want employees to feel like if they come in while they're infected or maybe infected, the consequences of that to Fruita are too significant. And so we want everyone to stay home and not feel like they have to come for a paycheck, that they will continue to get paid. Now, that was the idea 3 weeks ago, and I think that was effective in terms of giving some people some relief, at least employees. I think it's caused a little concern for employers in terms of, is this actually going to work in terms of me getting paid back? But since that legislation, the world has obviously changed significantly, and businesses are really starting to feel the pinch in terms of their own operations and their ability to survive. I think there's, for a lot of businesses, becoming a fine line between having to hibernate versus just going bankrupt. And so in response to that concern and those realities, Congress passed what is known as the CARES Act, and that is the $2 trillion that was injected into the economy, both through funding to various agencies across the federal government, but also giving opportunities to businesses to stay afloat. I think the main components that we're going to talk about right now are the Payroll Protection Program, emergency injury disaster loans, unemployment insurance, and direct deposits that are going to individuals. And briefly, because my role as city attorney, I'm not going to be able to help myself, and I really want to quickly touch on the impact on local governments. Because I think it is important for people to keep that in mind, people who are small business owners, to see kind of what the governmental entities that they're working with are going through as well. So the Payroll Protection Act, which I would say is the most prominent piece of the CARES Act legislation, is a $350 billion program. It allows small businesses to qualify for these small business loans called 7A loans. They're called 7A loans because that's the paragraph or the section within the Small Business Act that authorizes them. And so these businesses are now available, small businesses are now available for 7A loans, but the important facet of this program is that for 8 weeks, these loans are forgivable for certain expenditures that are made. So a PPP loan is available to small businesses or nonprofits with fewer than 500 employees. And I emphasize nonprofits because I don't know that the word has really gotten out to nonprofits that they are eligible for these benefits. And nonprofits obviously have employees just like businesses do, and they need to make payroll just like anyone else. So the PPP is now in place, and it expands the available uses of SBA 7A loan funds. It used to be that those loans were used for very narrow amount of expenditures, but now you can use 7A loans to pay employee salaries, sick leave, medical leave, your mortgage interest payments. I believe on the screen it says mortgage payments, but she say mortgage interest payments, rent payments, utility payments, and insurance premiums. And I should add that within the last 24 hours, the SBA has come out with what is called guidance, which is different than rules. But the guidance suggests that while the PPP is available to pay for rent, utility payments, insurance premiums, and other debt obligations, 75% of your PPP loan needs to go to payroll. The idea behind this particular provision of the CARES Act was wanting to keep people working or at least continue to have a salary. And so the federal government really wants to make sure that that's primarily what these uses are going for. The loan amount can be up to $10 million, but more likely if you're a small business, the calculation is that the loan is 2.5 times your monthly payroll cost measured over the last 12 months. And payroll cost, again, if I go back to this previous screen, basically includes employee salaries, paid sick leave, medical coverage that you provide, and vacation. And so that's basically the calculation for payroll costs. And so you get 2.5 times that. The one exception to that is the $100,000 rule, which means that the total amount that you calculate there cannot include salaries above $100,000. So that doesn't mean that, well, we can get to that. Now, the really, really important part that everyone should know about and probably is most aware of is that these PPP loans are provided to borrowers and may be forgiven if the borrower spends their loan proceeds within the first 8 weeks on payroll costs, interest on any mortgage payment, payment of rent, or payment of any utility charge. And so again, those payroll costs have to make up 75% of those expenditures. But if you spend money on those 4 things, all of a sudden, within the first 8 weeks, that loan is completely forgiven. Now, again, the Department of Treasury is going to issue some guidance as to how you apply for forgiveness. You do actually have to apply, but if you do make those, you file that paperwork, those first 8 weeks are essentially free to employers. So let's say you get through those 8 weeks and then you still have your loan outstanding. The remaining balance is going to be due in 10 years, and the maximum interest rate is going to be 4%. There's guidance that came out today that suggested that that rate will be about 0.5 percentage point to begin with. Businesses are also going to be able to defer any payment for 6 months and not up to for at least 6 months, and then not up to more than a year. But at least those 6 months are going to be essentially free to people after the first 8 weeks are forgiven. So it's a really incredible deal. And I would say that it is one that's going to be very important for businesses to get back up and running. Now, there's a second loan out there called an economic injury disaster loan. And this loan was actually revamped through the first phase of the stimulus package that came through. It was revamped and then again amended with the CARES Act, and so it looks a lot different than what its original purpose and function was a month ago. But they've upped the amount of the loan to $2 million per individual business, and it can provide economic support to overcome temporary loss in revenue due to changes outside the business's control. Certainly COVID-19 qualifies for that. Now, I think what a lot of businesses are going to end up doing is going to apply for a PPP loan and be able to finance those payroll costs. But that's obviously not the only cost that a business has. Inventory, for one, jumps to mind. as a significant cost that businesses who are trying to stay afloat or anticipating the future when the stay-at-home order is no longer in effect, they're going to want to be able to have their supply chain in place and be able to service their customers. And so they're going to be able to use this EIDL loan to go ahead and pay for that particular inventory. And if you're a small business, for-profit business, the interest rate on that particular loan is 3.75%. For nonprofits, it's 2.75%. And the repayment, again, has been up to 30 years. So that's a significant amount of time for the business to be able to repay those loans. Now, I would note that, again, there's been a lot of changes to the EIDL program. And so one of the main changes has been that they're going to go ahead and defer all payments on EIDL loans until December 31st. So principal payments won't be due until then. Interest payments also won't be due until then, except I would note that interest will continue to accrue from the date you make the EIDL loan. So there are basically going to be two options for small businesses out there. You're going to have PPPs and EIDLs. And there's this idea that you really should focus on using PPPs to pay for your payroll, EIDLs to kind of pay for some of your other hard costs that you're going to be incurring or even anticipating on incurring in the next couple of months or maybe even a year. And the notion that some people have is that, okay, if I have an EIDL loan, that gets approved in 3 days. We don't know exactly how long it's going to take for PPPs to be processed. And so some people have taken the idea that you could get an EIDL loan and then refinance it with their PPP loan. That is permissible. It's very clear in the legislation that that's permitted. What is being clarified by the SBA and the Treasury is that if you get the EIDL loan and start using that loan to make payroll, which you're permitted to do, but then you refinance with your PPP, that payroll payment used with EIDL funds cannot be forgiven. So it's really important to remember that that forgiveness doesn't retroactively wrap in expenditures that you made with your EIDL loan. Really quickly, let's just talk about how these two loans are getting processed. The PPPs are being processed through private banks that are SBA qualified lenders. And so there's a lot of banks within Fruita and Mesa County who are certainly SBA qualified lenders. And the legislation has made it a lot easier for banks who were not previously SBA lenders to become SBA lenders quickly. And so you will get a PPP loan by going to your bank who you have a relationship with. To get an EIDL loan, you'll go and just apply through the SBA, and that application is up and running. And as I said earlier, the legislation provides that those loans will get processed, the EIDL loans will get processed within 3 days, so it'll be fairly quickly. Now, the banks who will be processing the PPP loans are extremely busy. I would call your lender today if you're interested in a PPP loan or even think that you might be interested in that loan. As I mentioned, the program overall is $350 billion, which sounds like an awful lot of money, but an awful lot of businesses are interested in this particular program. And I don't foresee that there will be additional money coming forward necessarily for this program. And I think it's going to get sucked up pretty quickly. There's no real good guidance on how exactly money is being distributed to the banks or how priority is working in terms of money being distributed to those banks. So I think the sooner you get in the queue, the better off you'll be. Again, there's been a little bit of guidance provided by the SBA. So there is a sample form of the application now on the SBA's website. I would take a look at that just so you're very clear as to what it is you need to provide your bank. But the short answer is this was intended to be a very easy process for everybody. And so the requirements are minimal, to say the best. You have to essentially provide your payroll for the last 12 months and prove that you still have a pulse. And if you can do those two things, you should be able to satisfy the initial application requirements. Now, that's not to say that your individual bank won't have additional questions for you, but Again, the idea is that the federal government wants to get this money out as quickly as possible. So if we just back up for a second, from an employee standpoint, we have this legislation that's created emergency pay to backfill them in the event that they get sick. We don't want them coming to work and infecting other people on the basis that they don't want to miss a paycheck. We also have this program in place to allow businesses to continue to make payroll, to keep people employed, even if the business doesn't have the ability to have that revenue coming in on their own. This is the PPP program has been as a backfill to keep people employed with a paycheck coming in. That all might not be sufficient to keep a business up and running. And that, I think, is just a harsh reality that we are all slowly coming to realize with respect to this particular crisis. And I think it is inevitable that certain people are going to be losing their jobs. I'm sure that everybody or many people saw this morning that last week's unemployment numbers were over 6 million people applied for unemployment in the United States last week. That's an astounding number. It's a reality that I think Fruita, Mesa County, and the state of Colorado are all going to see very quickly if they haven't seen it yet. So under Colorado law, unemployed or furloughed worker is entitled to unemployment at a rate of about 55% of that unemployed worker's salary. Colorado actually does their calculation in terms of what the cap is in two different ways. An employee might be entitled to $561. They also might be entitled to $641, but the more likely outcome for almost everybody is that they're capped at $561. Under the new stimulus legislation, an employee now is entitled to an additional $600 of unemployment compensation every week until July 31st. And so this seems harsh to say, but for employers who are trying to do the calculation as to whether or not they should keep employees, it's become clear to a lot of folks that for employees who are making below around $50,000, it's almost a better situation for them, at least until July 31st, to be unemployed than employed. But that calculation doesn't take into account healthcare costs. And so for a single person who's younger, who only has to worry about their own insurance costs, COBRA or a program on the healthcare exchange, to the extent that the healthcare exchange is available, would not be terribly expensive. But for healthcare for a family of four on COBRA, that's going to be well over $2,000, and then maybe that calculation doesn't work out as well. But I think the important thing to remember here is that this additional $600 is on top of the state benefit that's coming in. The CARES Act also provided an additional 13 weeks of unemployment from the federal government. So now some employees will receive up to 39 weeks of unemployment, which is up from 26 weeks. And it also extends unemployment to people who weren't always eligible for unemployment. That includes independent contractors, self-employed individuals, and people with very limited work history. Typically, those people don't get unemployment, but under the CARES Act, they now will be able to do so. Now, a note about unemployment really quickly, when 6 million people suddenly show up applying for unemployment, that puts a tremendous stress on the unemployment system. And so even though that system is a state system, it is a system that nonetheless has been burdened in every single state. And so Colorado has gone to a system of applying by last name. And so as a W, I would have to apply, and I'm not going to get these days exactly right, but I'd have to apply on Friday. And so for employees who are getting laid off, I would not delay in terms of filing an application for unemployment. It's going to take about 6 to 8 weeks in order for that application to get processed. You will still end up getting paid for the amount of time that you're owed while that application is getting processed, but it's not going to get paid to you until the application has been processed. So it is entirely possible that you might go 6 to 8 weeks without that unemployment check. Again, they will retroactively pay you for the time that you filed, but it's going to be a while before that check gets there. And I think that's something that employers need to keep in mind as well, that if if a layoff is something that you are contemplating, I think it's important for you to be honest with your employees and let them prepare appropriately. So there is unemployment aid that is going to be available to everybody. The last piece of aid that is coming in for a lot of people is this direct payment that I think most people are aware of from the federal government. Every American, with a variety of exceptions, is going to get about $1,200. The Treasury Department this morning clarified that you don't actually have had filed a tax return. If you're someone who receives Social Security but hasn't filed your taxes in several years, you're still going to be entitled to your $1,200, and they're going to process that some other way. The $1,200 is available to anyone an individual making below $75,000 or a couple making below $150,000. And if you are a person who has a child, you are also getting $500 per child. And so a married couple of two would make out fairly well for a month this coming month. I believe you'll be getting your checks in May. The direct payments phase out after the $75,000 and $150,000 levels. So when you're making $99,000 as an individual or $198,000 as a married couple, you will not end up getting any payments. And that includes the $500 child check that are coming through. So we kind of have this system where employers are going to have certain obligations to employees to pay them for their time off, but employers are going to get paid back for that. And that's a great system for private business. And I think that there's also opportunities for businesses to stay afloat through the PPP program and other SBA loans, which is also excellent. And there are certainly going to be employees who are going to be entitled to unemployment insurance and direct payments, and that's going to help them stay afloat. And those are all really great things. As a city attorney, I would note quickly that thus far, local governments are not getting similar financial assistance. The CARES Act does provide $150 billion in what is called local government aid, but only the city of Denver is going to qualify for that aid because they are the only city with a population of over 500,000. I believe El Paso, Jefferson, and Arapahoe and Adams counties are also going to get a small chunk of money because as counties, they exceed that threshold. But otherwise, the state of Colorado is going to get all of that. They're going to get about $2.2 billion. They're going to be able to keep a large chunk of that. Fruita, Grand Junction, Mesa County, they're not going to see any direct aid from this particular program, and the state's not required to allocate anything to them. And so I just think it's important to remember when people in Fruita are looking to the city to backfill them or subsidize the loss. I think that that is a real concern. I know the city is trying to think about what is the best thing to do, but it's also important to remember that the city is experiencing this financial stress just like everybody else. But we'll see if additional legislation comes along to address that. I want to quickly talk about a couple of things that aren't involved in this stimulus legislation that individuals should keep in the back of their mind. I'm sure people are worried, even if they still have a job, about what happens if I do lose my job, or if you have lost your job, what happens to my house? The first thing to keep in mind is prior to the 2008 crash, mortgage companies and mortgage service providers were essentially able to deal with these situations however they wanted. But due to the crash, the Consumer Financial Protection Bureau was put in place and new rules were put in place. And these new rules, among them, were called loss mitigation rules. And under loss mitigation rules, banks need to work with you to make sure that you're able to solve your mortgage crisis, your personal mortgage crisis, in a meaningful way and to avoid foreclosure. And so I think it's important for people to remember that bank can't just show up tomorrow because you've lost your job and close on your house. And if your bank in particular is pressuring you or you feel you're being treated unfairly, I would look at the CFPB's website and verify that your lender is actually working within the rules. I would also note with respect to mortgages that the governor issued Executive Order 2012 about 10 days ago. And under that order, various departments within the state are encouraged to work with banks to avoid foreclosures or related evictions due to foreclosures, as long as that foreclosure is resulting from the COVID-19 impact. There's supposed to be a 90-day deferment on payment of all consumer loans, including your commercial and residential mortgages. And so even if a business is being affected by COVID-19, know that under the governor's orders, banks are supposed to be working with you. Now, keep in mind that this is an order from the governor that is encouraging work between the banks and the governor's various departments. It's not an actual law yet, but it is something that I think most banks are trying to adhere to, though again, it's not required. Similarly, if you are a renter, the governor is trying to work with banks and landlords to identify ways to avoid evicting you at least prior to April 30th. And I strongly suspect that that particular portion of the order will be extended longer, given that the stay-at-home order came after this executive order 2012. And so if you're a renter and you're worried about whether or not your landlord is going to get rid of you anytime soon, know that there are efforts in place to make sure that that doesn't happen. Though again, this isn't a law yet, but it is something that the various departments are working on. Finally, that order provided $3 million worth of disaster emergency funding for people who meet certain income thresholds to receive rent payments during this time, to make sure that no one ends up homeless as a result of this pandemic. So that was a quick breeze through federal legislation, and I know that I went fast, and there's a lot to talk about with this legislation, and I really truly did skim the surface. And so if folks have questions, I'd be more than happy to take them. But I think the one big takeaway that I have from all this is that there is a lot of legislation out there that is going to help us get through it. I honestly am not sure whether or not it's going to be enough, but I'm truly confident that Fruita is a great place, and we are going to have the ability to work together, and we really are going to all get through this together.
Paul, thank you very much. We really appreciate that overview, and we do have some questions, so we're going to jump right into them real quick. So going back to when you were speaking about emergency leave and FMLA, there was a question related to, do employees have to take accrued time off before they would be eligible for the emergency leave?
The answer is no. So you are entitled to your emergency paid sick leave immediately. You don't have to take any of your PTO or any of your other sick time in order to address your COVID related illness. You are entitled, this is a separate, what I like to call COVID time, and it is separate and apart from all your other leave.
Okay, great, thanks. Regarding unemployment, can employees file for unemployment before the actual last day of their current employment?
Yeah, so you can apply before your last day. Your payment calculations will be based on your last paycheck date, but you can begin the process today, and I would suggest people start doing it.
Great, thank you. One more question related to unemployment is, if an employee is on reduced hours rather than a full furlough, are they still eligible for the additional $600 per week unemployment benefit?
Yeah, so you'll have to apply through the state, but the current understanding, and I again think that this might be subject to change, the current understanding is that if you have a reduction in hours, you are entitled to the $600. You may not be entitled to unemployment, but under the way this has been written, you would be entitled to the $600 if there's a reduction in your hours. I would note, however, that there's been some additional guidance that has made people believe that you have to be eligible to apply for unemployment in order to get the $600. So it's a little confusing. And I think there will be some guidance, but at the moment, the answer is yes. But again, that's subject to change.
Great, thank you. Another question. Sorry, we're just trying to double check all the different ways we're receiving questions, so appreciate your patience. Another question we have is, that came in, is if a business is, as far as the aid in the CARES Act for local businesses, how does it apply to the, is there any difference in application if they're able to still be open? So they are considered a critical or essential business, but they're obviously not receiving the same amount of revenue that they typically would be in a normal situation versus businesses that were not able to be open at this point in time.
Yeah, so every single small business, if you have 500 or fewer employees, are eligible for both PPP loans and emergency injury disaster loans. And I think the real question then becomes the two examples you gave, those businesses are going to be treated slightly different in that the business that is closed or unable to operate at the moment versus the business that is still hanging on. They're going to have two different revenue calculations in that the business that's hanging on is going to have more revenue coming in for the last 12 months than the business that's been closed. But again, the SBA is going to look back and say, okay, what was your total revenue over the last 12 months? And then multiply that by 2.5. And so when you make that calculation, that's the amount of the loan that you're going to be able to be entitled to. And so then you'll have revenue coming in. Once you get that loan, the date that you sign it and money is put into your bank account, you're then going to be able to make payroll costs for 8 weeks. And those payroll costs, in addition to a couple of other minor things, those are going to be forgiven. And then going forward, you'll still have additional revenue that you got from that loan due to that overall loan amount. And then you'll be subject to what are still very, very favorable interest rates over a long repayment period. And so, one would think that if you had a successful business a month ago, then this is a loan that you should be able to pay over the duration of the loan.
Okay, great, Paul.
And Mike, I just want to add one thing that I didn't touch on in the presentation with respect to businesses and the PPP loan. When we talk about business being closed, part of what the PPP is trying to do is think about businesses that did close and try and get them to open back up and continue to pay those people. And so there's you essentially get a credit if you hire people that you let go in the last couple of months due to COVID-19. And so it's a little complicated. We don't need to get into it here, but you are allowed to hire people back and continue paying them, and those payroll costs will be forgiven. And so if you let people go, bring them back in if you're doing this loan.
Okay. Can you use the PPP to pay employees you hire through a temporary hiring agency?
So that's a good question. The answer is it doesn't. You can pay any employee that you want. The real question is going to be whether or not your overall payroll costs line up with your payroll costs for the last 12 months. And so what the SBA is going to look at is whether or not you dropped above or below that average during the next 8 weeks. And so if you drop below that average in terms of the amount that you're paying, then the amount that's going to be forgiven of that loan is going to be proportionately reduced. Now, if you go above that amount, I don't think that's a problem. But what the SBA is really looking at isn't who you've hired, but who you're paying. And so you need to be consistent in the amount that you're paying versus what you've been paying on average over the last year.
Okay. Another question that came in is regarding the direct payments to individuals. And that question is regarding the $500 per child check. Are there any age limits, or is it for any child living at home? What is the boundary on that?
I have a bad news for parents of millennials. When Shannon moves home, his parents do not get $500. Yeah, so the definition of child is 18 and under. And I should also, as we're just talking about children, right? So let's just quickly answer that question. The $500 will be for kids under 18 and under. And it just reminded me that there's some new rules with respect to staying at home with school-age children. If you have school-age children who are over 14, those kids, you're not going to be eligible to stay home and watch those kids and receive your emergency paid sick leave. That guidance came down yesterday. And so the high schoolers are going to be forced to take care of themselves.
Thanks, Paul. Of course, thanks to everyone who's been submitting questions via Facebook and via email. We do have one more question on our Facebook and maybe a little bit of clarification from that last one. And can you hire new hires and use the PPP that way, Paul?
So again, you can hire new people. The real question is going to be what your payroll looked like last year. And so you cannot drop below your payroll from last year, but you can go up. You can pay your payroll cost. Now, again, when you think about payroll costs, that means you have to think about payroll costs in two ways. One, payroll costs is the calculation that determines the amount of your loan. And so as you look back 12 months, that's how they're going to calculate your overall loan amount times 2.5 times 2.5. And so then going forward, if you've hired too many people, your loan might not be able to cover it. But I have a hard time believing that you're going to hire so many people that it's going to exceed 2.5 times your payroll costs from where you were. But do just keep that in mind that that's how the calculation is going to work. And so you don't want to exceed that.
Great. Shannon, are you seeing any other questions that I've missed by chance?
There is one in the chat. Thank you, Steve. Maybe it's a comment. It's, I have heard that you can get a loan from your IRA/SEP.
Yeah, so there is a program that allows you to, typically IRA withdrawal would be a taxable event, or there would be a penalty involved. And I would double check this with your accountant, but my understanding at the moment is that those penalties are going to be waived. It's still going to be deemed income to you. So you'll have to pay taxes on it. But if you're making that withdrawal and you're under 59, I believe that the CARES legislation does make that a more palatable choice than it was a month ago.
Great, thank you, Paul. We did have another question come in, and are 1099s considered as payroll when you're talking about the use of PPP?
Yeah, so it is any salary or compensation. It's a pretty wide definition. It's salary, compensation of any kind that you're paying as a business. So they don't necessarily need to see a W-2 per se. I think they just are looking at overall compensation. But again, your bank might have a different perspective. And again, remember that PPPs are going to be through a private bank, and your emergency disaster loans are just strictly through the Small Business Administration.
Okay, I think we've covered all the questions that are coming in. I'll just say a couple comments real quick. Appreciate you, Paul. If anybody has any questions, please submit now, and we'll wrap them up. We're trying to stick to an hour, but the email and the feed, will continue to watch that and try and get questions answered even after this is complete. I did want to thank Paul for his time. Again, like I said at the beginning, we're super fortunate to have Paul as our city attorney here in Fruita. He's provided a wealth of knowledge as we've been responding to this unprecedented time that we're all dealing with. I also want to thank each of our small businesses and all the businesses here in Fruita. As you're probably well aware, the city, we exist to provide essential services, and we highly rely on sales tax revenue that's collected by a majority of our businesses in town, especially the majority of our small businesses that are in City of Fruita. And so we're definitely all in this together and filling this in many different ways. And we hope that this is beneficial to each of you. I want to thank the Fruita Area Chamber of Commerce. They've done a tremendous job of providing resource links on their website. If you want to find information related to the city. Hopefully you've already seen this, but just a reminder that we put all of our updates on fruita.org/COVID-19. That's found right off of the fruita.org website on the main page. And we update that regularly each day. And what we do, because there's such a vast information flow coming, we basically put all the information that's related specifically to the City of Fruita on that page. And then we have links to the Mesa County Public Health Department that has daily updates as well that are very pertinent to all of us here in this area and throughout the valley, as well as the state, CDC, and other resources. I want to thank all of our economic development first responders. We work really closely with the other jurisdictions in the county, so the county government, the other cities and towns, as well as the other chambers, in addition to the Fruita Chamber, but the Grand Junction Chamber and the Palisade Chamber, Grand Junction Economic Partnership, the Workforce Center, and the Business Incubator Center. And the Grand Junction Business Incubator Center, who also runs F-Works, which is a co-working space here in the city of Fruita, they are also the Small Business Development Center. So when we're talking SBA, there are local boots on the ground with SBA, but they link you to the state's website at this point in time, because that's where all the pertinent information is being updated regularly. So with that, I want to just say this is an amazing community. It's an honor to work for this community, and seeing the response of everybody getting through this has been amazing, and we will get through it. It looks like we do have a few other questions, so I'm going to just double check and make sure, or at least comments. Looks like not seeing any additional questions, so I think we will wrap it up. Any final thoughts that you want to mention, Paul or Shannon?
No, I would just echo, Mike, your sentiments that this is an amazing community. I feel grateful to be able to have the opportunity to work for the city. And it's truly been a privilege. And I do truly mean that because this is an amazing community, I do think that collectively we're going to figure this out. It's not always going to be smooth, but we'll get there.
Great, thanks, Paul. One of the questions sorry, Shannon, go ahead.
Oh, no, you go ahead, Mike.
Okay. One of the questions we get asked regularly related to some of the things Paul asked is what about deadlines and on various payments? As a city, and Paul mentioned this with some of the governor's orders, we're definitely working through those as well. And so utility payments, we did not have to make a change because we already are set up to work with people when there are hardships, and our staff is empowered to work with people on payment plans. Definitely no penalties and interest per the governor's order on some of those utility payments that are being waived right now, so people can stretch through this time, and while we're waiting, while different businesses or individuals are waiting on aid that's coming, or unemployment, or whatever the matter may be. As well as so sales tax and property tax, we don't collect. The city of Fruita is a little bit different than larger jurisdictions, so the state collects those for us, so we don't collect them. So we're a couple months behind before we receive those numbers or receive those revenues. But the governor did do an order. He did issue an order that allows the Treasury Department for the state to work with local jurisdictions when in those same times in regards to late penalties or no interest on late penalties. So I just wanted to make sure people were aware of that as well. And I think we will start wrapping up now, and appreciate everybody that's joined us today. This is recorded so as it was streamed live on Facebook, it'll be there. I think we'll post it on our YouTube channel as well, so people can catch up and skip around to see what they missed. So thank you very much, and we'll see you all later.